Good morning. How you guys doing? Hopefully you're well. Want to talk to you today. Per the agenda on the screen, we want to go over the CPI report as far as December is concerned. We're going to talk a little bit about the 10-year, get into what rates are as of the recording of this video because of the CPI and the 10-year Treasury note. Uh, give some time for any questions that you may have, either live or going forward in the future, and then go over some down payment assistance programs that we offer, not just in the home state of Texas, but nationwide, because we're a nationwide lender. A couple of other things. If you want to, let me do it like this. Get on the calendar for a consultation. Pull out your phone, hit the QR code, or right beneath us here, you'll see the link. You can copy and paste that in. Get on the calendar if you're ready to do so. And lastly, any questions that you have per the friendly reminder section. Got to get this right here. Yeah, right there. Put a Q in front of your question, because if not, you're just making a comment or a statement, right? So without further ado, let's get into today's video. First section, we're going CPI, right? CPI. So, per the calendar here, um, today is 11th. We got initial jobless claims. I do want to touch on that briefly because what was expected was 210,000, revised down only to 202,000, which is a good thing, right? Because there's not a lot of people out of work. As the Fed is working on bringing down inflation into their target range. In days of old, from my study, one of the major pain points in doing so was the loss of jobs, right, in the economy. But that does not seem to be the case. So that's a good thing, right? But with that said, when we look at the consumer price index for the day, um, it was a miss, but not by much. And the reason I want to point that out is because depending on who you watch, remember what my dad always told me, right? Follow the money. And then from my little time as a part-time job that I had while I was in school, going through that journey, I worked at a TV station, an NBC affiliate. And one of the common themes in the newsroom was if it bleeds, it leads. Okay. Because it's about attention. So consider the source, understand how they make their money before you go forward. And more importantly, readers are leaders, right? You can have access to the actual report so you can read for yourself. And if you don't necessarily understand today, the more you do so, the more you'll build that muscle so that you can really understand, because this is important stuff, in my opinion, that affects all of us, right? So uh, it was a miss, but not by a long shot. Okay, not by a long shot. So inflation is still moderating. This last little leg is somewhat challenging, and the Fed, in my opinion, may not cut as many times as they thought they were going to cut here in this year. Just like they overhyped, in my opinion, they probably overstated how many times they'll cut. I believe there'll be some cuts, but uh, that's pertinent for those of you that might be on the sideline waiting for a certain interest rate. So I'll say this: uh, anytime where you could get below 6%, man, you really need to look at this thing from the standpoint of owning residential real estate, meaning you plan on staying there for a while. Okay. This is not a trade. This is where you're going to lay your head and you can afford it. And then ultimately, when the environment is better, you can reposition yourself. So numbers didn't come in exactly where they wanted to, but again, not a big miss. Okay. And really, these are the this is the prior month, the projections, and then what actually happened. So, year over year, slightly up a little bit, right? But as we look at the core overall, it's down, not by much. Okay. So, um, with that being said, let's look at the actual report. This is the report. The link is in the description. So that you can go get the summary of what happened, I'm going to look at table 2 to point out and highlight what my title read, right? The real reason home affordability is an issue, okay? Or why folks can't afford homes, in my opinion. And this is not uh, to be taken in a negative or derogatory. Don't take it the wrong way, okay? Just looking at some numbers. But when we look at this table here, and I'll scroll up to the top quickly. I don't want to make anybody nauseous. But this is just one of the economic data tables from the summary of the CPI report today. When you go all the way down to the bottom and read all of this stuff, this is where I'm getting this table from. But in essence, it's just the budget, right? And that's one of the things that we speak to you guys about that are serious about becoming homeowners and using real estate to build the foundation, create that generational wealth that you're going to pass down. You got to know your numbers, okay? So what these numbers tell me, and I've gone through and highlighted, the change, the increases, if you will, in all of these different baskets, right? They got food, it's broken down to different meats and things of that nature. But for the most part, when I look at the big increases that really move the needle, obviously housing and or rent is going to be one of those categories because it's the majority, the largest dollar item in that bucket, right? But when we look at, let me get down here, energy. Let's say energy. Energy was really down, and that's really helped keep the overall number even lower than what it possibly could have been, okay? So that's a good thing for folks. But it's a lot of goods here. The point I want to make is right here, okay? When you look at the consumer credit report that came out on Monday, 5 trillion was the headline overall. About 1.7 trillion of that is in revolving or credit card debt, okay? And that is huge when we look at the budget, if you will, in this report, how they calculate the CPI. You can see a majority of where the increases were month over month, right? And so we have things that don't necessarily deal with what I would call, let's say, the big four. So your shelter, your food, transportation, and medical. A lot of these increases that we're seeing are tied to consumer spending. And that's the point I want to make. Most people today are lamenting about the price of homes and things of that nature and how it's so unaffordable. But a lot of times that affordability comes from your lack of budgeting in your budget. And these numbers say that, okay? Uh, the last quarter was one of the biggest quarters we've had as far as the consumer is concerned. And folks aren't buying houses. You're buying goods and services such as computers, telephones, alcoholic beverages, I saw even wrapping paper, kick it items. We some of us love ourselves, right? The outer appearance, uh, stationary supplies, things of that nature. A lot of these things are things that are preventing you from having the necessary income that you need to have to afford uh, a purchase like a home. Now, you can do what you want to, obviously, but what what I admonish you not to do is get caught up in the narrative and think that woe is you if you don't know your numbers. Do you have a budget? Do you know where your monies are going? Just had this conversation with my daughter, okay? And we're just going over numbers year over year. And you'll be surprised. And she has a budget, but there's a way to budget as well. As I take a step back, you have to look at it weekly. You have to take your receipts and you have to itemize it. The purpose of the budget, just like this CPI report, is to track where your dollars are going because these dollars will tell a story and it'll tell you if you're overspending, and if so, where, and then if so, can I make adjustments for more money in my month, or do I need to go make more money? It's simple as that, right? And I think that a lot of folks want to jump on the bandwagon that I'm 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 less fortunate than people 10, 20 years ago. Not the case. You got to know your numbers. And again, going back to this report, we see, where a lot of these dollars are going that we, the people, are spending. This is something that you can take from and glean from and do it on an individual basis to find out where your dollars are going. But when we look at shelter, let me go back to shelter here to keep it in context with what we're talking about. Rent, shelter, and primary residence. I mean, it's pretty much flat, man. Hadn't changed. Actually went down a little bit, okay, from month to month. So but there's a lot of recreational spending. There's a lot of other lodging away from home, including hotels and motels. Kick it money. You see what I'm saying? And those things could be expensive. Again, do what you want, but know and understand that if you're a younger person, your future self is going to appreciate some of the things that you do today that might not seem so sexy if you allow me to use that term. So anytime accountability comes up, the narrative around in a lot of circles is that I can't afford it. Well, the numbers that we're seeing are showing otherwise. And again, you can do what you like, but if you reach the age of 40, say you're 25 to 32, 28 to 35. When you get to 40, you're going to start looking like, wait, hold on, wait a minute. I might not, and see all that kick-in time that you were doing, that money that you did not, the opportunity cost that you lost because you didn't know your numbers is gonna resonate, especially if you watch this video, right? You'll be like, Rob told me that, 5 years ago, 10 years ago. So again, just know and understand that consumer spending is a big reason that affordability is not affording for a lot of you guys that want to purchase a home, and you're waiting on home prices to fall, but the numbers there show that we don't have enough single family homes, single family, duplex, triplex, or fourplex. There's a surplus of apartments. Again, you got to read. Uh, and so we see the rents kind of moderating there. But some of you guys that want to own, you got to get on the ladder because prices this year are going to be up 2-3%. Okay. So made my point there. Made my point there as far as the CPI actual data is concerned and how you should look at these numbers and glean for yourself where money is actually being spent. Okay. Uh, Another area, let's see here. Medical expenses make sense, kind of up, but motor vehicles, okay? Motor vehicles, parking fees, inspection fees, insurance across the board, right? I hear folks all the time, oh, don't buy a house because auto insurance. You're driving a car, and a lot of you guys are driving cars with payments $700 to $1,500 a month. That's your house. Okay. And again, you can do what you want, but your future self might not appreciate where you are today. So just trying to give you a different perspective. I know there's a ton of folks out here telling you guys owning is not what you want to do, uh, and that you should invest. And if you're from that school, stop and look at your investment portfolio. And here's the deal, man. Investing $100 here, $50 there ain't going to get it. Okay. If anybody that's telling you that and they'll tell you the truth, I mean, you got to be buying 100 more shares, 10, 15, $25,000 increments really to move the needle. Right. And I'm not telling you not, because you have to start somewhere, but the truth must be told. To whereas buying a home for a lot of folks is it's a forced savings account. And over time, just look at the numbers. There's an appreciation factor as well as you utilizing it, right? Has fun. It's shelter. So don't get caught up in the hype about what it is that you think you might do. Look at what you're actually doing. Let's move forward. So, insurance, here goes the recreational services, right? Video and audio, cable satellite, purchase subscriptions, video disc, okay? Club memberships. Everybody, finna get fined every year. Look, that's up. Club memberships to the gym. That's way up. It's real hot. Okay. So when you start seeing what we're spending on as a nation is concerned, you can see where a lot of your extra dollars are going. Meanwhile, you have people like here in the state of Texas, people are coming here from all over the world capitalizing on the low cost of homes in a lot of the areas, even in the major MSAs and the peripheral around those areas, buying homes that are affordable, getting on the ladder. Okay. And a lot of these folks, which I'm seeing, got a young guy that just comes to mind that he's looking right now, young professional. Again, I look at these bank statements and things of that nature, and the numbers just tell a story on what is important. And a lot of times that comes from exposure. That's why we're trying to expose you to these things and get you not to be sensationalized and emotional, but to look at the numbers and then bring that to your personal economy and look at your numbers and to make some real decisions so that you know and understand in the future if you don't hit the mark, you don't have anybody to blame. Okay. Because if you think these companies and things of that nature are going to take care of you in the future, just ask Big Mama. Okay. And then look around. The environment has changed. Your home for a lot of people, for a lot of reasons, is a new corporate office space. Okay. So if that's something you want to do, get in where you fit in. That's why I come on and try to bring these numbers. Okay. So let's see here. Uh, that was CPI. Let's go to the 10-year. 10-year. Yeah, baby. Yeah, let's go to the 10-year and see what some of these numbers, how they've had an effect today. Anybody that's watching, again, we're up over the 4% mark. But I'll show you here in a minute, because CPI really, the core is still on a downward trend, it's just not going down as fast. It's probably going to be a little more difficult to get down into that 2% range because of where we are for a lot of reasons that I won't bore you with now. You can see, and we'll just compare right now. Rates really aren't that bad. And this is an example of interest rates along with an APR example, but these aren't your specific rates, but you can see a trend, right? So rates have not increased dramatically as a result of the 10-year being up over 4% because the market understands what's going on. Again, we're trying to teach. So as you can see, 30, 20, 15, 10, 7, 5, 3-year arms. Then you got your government lending specifically, right? FHA, VA, USDA. Well, USDA is not going to show up in here, but FHA, VA. You can kind of see the trend. And then with the jumbo loans, right? It's going to be a little higher, but nothing over 7%. And depending on who you are, where you're buying, your loan amount, your down payment, or your loan to value, your debt to income ratio, all those things matter. But the point I'm trying to make is this is not a big deal killer as of today. Okay. Now, um, uh, where do I want to go? Let's go back here. I think that's good enough. I think that's good, right? We don't want to beat a dead horse. So let's see here. CPI 10-year went over rates. Okay. Do you have any questions? Do you have any questions? Uh, it's important to ask questions, not just for you, but for those of you that might be uh, a little less confident when asking questions. If you do, leave it in the comment section, or you can reach out to me directly. If you reach out to me directly, I'll use the question. I won't say your name, but again, it's about teaching and having everybody, all of us, have the right information as we go forward. Because home ownership is very important. It's very important. Ownership is important. And I'll leave it there. So any questions, always feel free to ask. And we will get you an answer. Okay. We will get you an answer. So I don't see any questions. So let's not hold it up, Rob. Let's keep it moving. Let's get into our DPA section. DPA section. So our first one is T-Shack, state of Texas. Texas State Affordable Housing Corporation. They have grants. They have 3 year deferred forgivable. Okay, meaning it's a silent second. You keep the loan for 3 years, the money that you get disappears. The thing that you have to understand with all programs, you want to know what the costs are, because the costs are going to be subtracted from what it is that you're actually getting. And lastly, it's an assistance program, not everything. If you don't have any money, you don't need to buy a home, respectfully, because after whoever talked you into it, even if they're able to pull that off, when something goes awry, that person is not going to pay for it for you. Okay. So minimum, you need to have the minimum down payments, right? So if it's a first time home buyer, you haven't owned in the most recent 3 years and you're going conventional, 3%, FHA 3.5%. Okay. And I would say the same falls in place for USD and VA, because if you have the, let's call it 3.5%, then you're just dealing with the closing costs, right? And you're not having to deal with the down payment. But don't let anybody tell you otherwise, because again, I or they are not going to make your mortgage payment for you. TDHCA, 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 Texas Department of Housing and Community Affairs, right? They have down payment assistance programs as well. Okay. And you know what? Let's see here. Do I have an idea of what their rates are? Yeah, let's go over here. Let's go over here. This is what the TDHCA is looking like today. And again, rates have not jumped as a result of the CPI because it's really in line. But same concept, right? They have in with the TDHCA repayable, right? 30-year deferred repayable second liens. So when it's repayable, the interest rate is going to be a little better. Okay. The best product that they have, the 30-year first lien on assistance. There's no down payment assistance associated, but the interest rate for the first was below market. And the most recent bucket that we had was at 5.75%, and it was there for 2 weeks. Gone like good candy. All more the reason for you to get prepared the proper way to know what it is that you're looking for. You have your team in place. Uh, with my folks that are looking at this money, whenever it comes online, we get it reserved, and then you have 45 days to find a house. You can't do that trying to get approved. You already have to be ready, okay? Because there's competition out here in these streets. Let's move forward with our VA folks. Love the Texas Veteran Land Board. Why? Because most Texas veterans have the required disability. A lot of folks that do this have that 100%, and if you don't know, if you're somewhere else in these United States and you think about coming to Texas, love the veterans. If you got 100%, you're not paying that tax. That's that's still the largest millage rate line items when it comes to the tax rates. Or the portion of your monthly payment as far as your taxes. But we just passed or amended the Constitution in Texas. You get a larger homestead exemption. Those of you that are out there that own homes, be surprised, man. I still see a lot of folks that have not filed your homestead exemption. Go file your homestead exemption, and you don't have to pay anybody. Just hit your county up, get the form, file it. You could thank me later, right? Because it will lower your insurance costs, ultimately lowering the amount that you have to pay for your monthly payment, right? But I digress. Texas Vet, if you meet the requirement, that's the bond, that's the benefit. You get a below market rate. This week is 5.68%. To be honest with you, after 2 o'clock on Thursday, you really need to wait to see what's going to happen on Monday, because you need to reserve the fund. So there's a process for this as well. If you think you want to look into it, holla at me. We'll be glad to assist you. Last but not least, we want to talk about our national down payment assistance. And let me put a pause here. Again, we lend nationwide. Okay. We have access to other down payment assistance. Whenever I'm doing my home loan consultations, this is what I like to tell folks. You submit your application. You submit the appropriate documents that we need to approve you, not look at your credit and say you're approved, but approve you. Then we are going to match you with all available down payment assistance programs. I'll be here for 2 hours going over all of those programs. So I'm just hitting the high level ones that apply to a lot of folks. But again, there's more than the ones that I just mentioned. Okay, this is our national product that we partner with one of our broker partners, but it's One Plus Purchase Plus. One Plus, $350,000 or less, 80% or less of the area median income. Okay, you hear those two things? That's the two main qualifiers. Get up to 2% to either use towards your down payment and closing costs. So again, if you got the 3% already, you get 2% back. More times than not, you in there like swimwear, because the other 2% that you have is going to get you, if not into the home, just maybe a little bit more needed for your escrow account and things of that nature. And then where we are today, folks are still giving it up on the seller side, new home construction and existing. Another reason to move forward if you can, because there's still enough folks on the sideline that need a little more help as it pertains to rate and things of that nature. And so you have still somewhat of a buyer's um, market, although inventory is rising, okay, but it's still not in a place where it's going to go to 2008 and we see house prices drop. Not going to happen, right? Purchase Plus. So One Plus, hit the main thing, Purchase Plus. Here's the deal. You have to live within a certain census tract at the time of application. If you make those qualification requirements, okay, then you can buy anywhere in the country. Lovely. No max on the purchase price. You can go up to the conforming loan limit if you can afford it, and you get up to $5,250, right? So plenty of programs available to help deal with affordability. But the main thing that we have to come to terms with is, do you know your numbers, man? Right? Because that's the largest barrier. That's the largest barrier, really, to a lot of you all buying a home. It's not the purchase price. Okay. It's not. It's not the monthly payment, because we have a lot of ways to help mitigate those monthly payments now. Okay. It's your other portion of your budget. It's like I told my daughter, it's the tricking money, or we call it lifestyle creep. Okay. So I think I'm gonna do a video on younger folks humbling themselves, staying at home as long as they can to stack up some ends to be able to get into a home. But if you're in that position, you can't trick the money off, okay? Because you feel like you got it. Well, you got it because your people are covering you for you to have the opportunity to get right, okay? That's parents, grandparents, aunties, uncles, whoever. Because we got to learn how to come together, especially in times like these, to make sure who's got next is straight. So there you have it, guys. We hit it on the head, right? We hit CPI, the 10-year treasury, rates. If you have any questions, put them in. And we went over some of the down payment assistance programs. Don't play yourself, man. Hit the link. Hit the link right there, the QR code. Take a picture or copy and paste the link in the description. Get on the calendar so that we can help you make your real estate ownership, residential that is, goals a reality in 2024. Y'all be blessed.